Strategic predictive analysis. An economy where individuals come before corporations. The world's financial order has long placed corporations at the top of the pyramid, while individuals acted mostly as laborers or consumers. But what if this hierarchy flipped? What if people, not companies, became the true engine of economic value? The emerging model around Pi Network dares to answer these questions with a vision that places individual contributions before corporate power. From corporate-centric to individual-centric, a seismic shift. For centuries, economic growth has been measured by corporate profits and stock market indices. Individuals have typically served as wage earners or buyers, rarely as primary value creators. Pi Network proposes a dramatic reversal. Money creation begins with the individual. Instead of waiting for banks or governments to mint currency, Pi users generate value by mining, validating, and building the ecosystem themselves. Question: why is this shift important? Answer: because it decentralizes financial power. When every participant can directly create and distribute currency, no single institution can monopolize issuance or set the rules unilaterally. Contribution-based currency. People as issuers. Traditional money originates from debt mechanisms. Central banks issue currency backed by government bonds or loans. Pi's model is different. Mining Pi does not require expensive hardware or massive energy consumption. It rewards everyday participation. Tasks like KYC verification or helping secure the network become direct grounds for currency creation. Question: does this make everyone a mini central bank? Answer: in a sense, yes. Each contributor adds trust and utility to the network, and currency emerges as a result of that trust. The value of Pi reflects collective activity rather than institutional decree. Zero margin transactions. Ending profit extraction. Corporate economies thrive on profit margins. Every transaction typically contains a slice of surplus captured by intermediaries, banks, platforms, or retailers. Pi envisions zero-margin transactions, where value flows directly among participants. Intermediaries can still provide services, but profit extraction is replaced by service-based compensation. Question: how would this change everyday commerce? Answer: imagine sending payment across borders instantly, with no hidden fees or banking delays. The incentive shifts from hoarding profit to providing reliable service. Over time, wealth concentration could slow, reducing systemic inequality. Redefining the mainstream. Pioneers at the core. In today's economy, the mainstream consists of capital holders, corporations, banks, large investors. In Pi's design, the mainstream is the contributor community. Individuals, called pioneers, shape monetary policy through their activity. Corporations may still build on the platform, but they must align with user-driven rules to stay relevant. Question: will corporations resist or adapt? Answer: likely both. History shows that established players often resist disruptive change. Yet those who adapt, by providing services inside the Pi ecosystem, could thrive in a market where trust and participation matter more than sheer capital. Strategic outlook. An economic invention. If Pi achieves mass adoption and demonstrates utility at scale, it could be remembered not merely as a cryptocurrency but as an economic invention. Its implications extend beyond blockchain technology. Democratized money creation. Individuals mint value through contribution. Innovation in transaction structures. Profitless exchanges challenge traditional banking. Transformation of economic actors, from capital-centric to contribution-centric. Governments, academics, and policy institutions would need to study this shift carefully, as it challenges long-standing economic theories about scarcity, profit, and power. Final reflection. Pi Network's vision is bold: a human-centered economy where corporations serve the community rather than dominate it. Whether this prediction becomes reality will depend on adoption, scalability, and the willingness of global systems to embrace change. Closing question: if the power to create money truly returns to individuals, how will you choose to use that power? Build shared prosperity or repeat the old patterns of inequality?